Good morning, good morning, good morning, good morning, good morning, everyone, and welcome back to the Mango Grow for your daily Bitcoin analysis. Alrighty, today we are going to be doing a Ichimoku analysis, and it's been a while since I've done a pure Ichimoku analysis, and it's going to be especially interesting today because we potentially have a forecast target, all right, an actual target number that we can derive using just the Ichimoku. So we're going to be talking about the cloud trend, which is very, very important. It's going to set the basis for the analysis. And we're going to be talking about equilibrium using the cloud components. And once you guys understand this, you guys can essentially use this analysis for any market, and it's going to be such strong edge. Just by simply looking at the Ichimoku, you're going to be able to look at a chart and say, hey, yeah, this is bullish, yeah, this is bearish, this is neutral, etc., right? So yeah, very, very interesting analysis today. We're going to be having a particular dollar number that we're going to be looking at using simply the Ichimoku. Also, today's video is going to be focused on the weekly time frame, which I know for a lot of you is a very, very high time frame, but is still a lower time frame than the previous video, which was 2 days ago, the 3rd of Jan. I really recommend you guys watch this video where we discussed the yearly time frame as well as the 3-month time frame. If you guys missed this video, I highly urge you guys to take the time to watch it, because this video is going to set your psychology and mindset for the rest of the year. We discuss 2 different scenarios that could play out, right? Remember, this was not a forecast video. This was more of an exercise that allowed you to strengthen your mindset and be prepared for anything the market throws at you. I do give you guys a bull trigger that I know many of you are going to be focusing on just that bit, but I really, really recommend you guys focus on the rest of the video, guys. The psychological edge that you can derive from the exercise that we went through is going to be far, far more important than simply waiting for Sean's signal, right? Do not focus on just trading that way, guys. This market, guys, this current market that's coming up is going to be about being able to temper your emotions and the psychological edge that you should strengthen over the rest of the market that's going to be making the same mistakes, trying to time the bottom, trying to time the perfect entry. Do not fall into those traps. Just to give you an idea of everything we did talk about yesterday, this is what we talked about. Going back to today's discussion right over here, where we are going to be talking about the Ichimoku, the disequilibrium that we are finding on the chart at the moment, and how we can derive a potential forecast target from just the weekly Ichimoku. Okay, so just a quick crash course for those of you who do not understand the Ichimoku. And by the way, if you guys are in the seed program and have not watched the Ichimoku module yet, please go ahead and do so. Now more than ever, this is going to serve you well. The Ichimoku module covers everything, right? I go over each component and how to use all of the components together. It's honestly the only indicator you need. Okay, so what exactly is the Ichimoku? A lot of people misunderstand the Ichimoku. The Ichimoku is not really a single indicator. It's more of a system, and put together, okay, when you put all of the components together, it is a very, very powerful tool. Just by looking at the Ichimoku, one single glance will allow me to decipher whether this market is bullish, bearish, neutral, whether it's in equilibrium or in disequilibrium. And you know what, guys? That's by far its most powerful feature. Its ability to identify equilibrium. And this works especially well in crypto. And I'm going to show you guys how well this actually works. What is it telling me at the moment? Well, it's telling me that the Bitcoin chart is in disequilibrium. How am I able to tell that? Well, you're looking at the interplay between the Tenkin. Okay, the blue line over here, guys, is the Tenkin. The red line over here is the Kijun. And the green and red cloud that you guys are seeing over here is known as the Kumo, or people simply call it the cloud, right? So the green cloud and the red cloud. So what we want to look at is the interplay between all of these components over here: the Tenkin, the Kijun, the Kumo, as well as price. So price's relationship with the Tenkin, price's relationship with the Kijun, and price's relationship with the cloud. Okay, at the moment, what are we seeing? We are seeing a red cloud, which identifies a bearish trend. Okay, that's your base case right over there. The cloud is red, so the trend is bearish. But is that enough? Can we be as binary as that? Is trading that simple? Of course not, right? So what we also want to look at is what price is doing in relationship with the Tenkin and what price is doing in relationship with the Kijun. We can see that price has been rejecting the Tenkin now each time it has reached it for the longest while. So now we have our trend resistance established, right? We can use our Tenkin as our resistance level. But notice something, guys. Our Tenkin and our Kijun are beginning to widen away from each other. They are losing equilibrium. If you guys go all the way back over here, right, during the consolidation phase, you can see that Tenkin and Kijun were rather tight. In fact, as soon as they tightened right over here, this is when we got extremely bearish, and we were like, Bitcoin needs to defend this TK cross right over here. Okay, at the time, Bitcoin was sitting somewhere around here. We were sitting at the bottom of the cloud, and we said we're likely going to get a bounce all the way to the TK, and we'd like to see Bitcoin close above the TK somewhere around here. Bitcoin didn't do that. Bitcoin actually rejected the TK, and ever since then it's been down, down, down. And what have we seen since then? A disequilibrium between the Tenkin and the Kijun. This wide gap is very, very important. Very, very important, okay? So at the moment, we are seeing price sit very far away from the Kijun and very far away from the cloud, and more importantly, the Tenkin and the Kijun have a wide C-span gap, okay? What does that tell us? That tells us that we have the potential to see Bitcoin fill this gap, provided Bitcoin starts closing multiple weekly candles above the Tenkin. And guys, this can happen very, very fast. More importantly, we are seeing a Kumo over here. And if you guys remember your Ichimoku theory, again, guys, I implore you, go ahead, re-watch the Ichimoku module. Do not miss out on all these opportunities that are going to present themselves. If you guys remember Ichimoku theory, if we have a Kumo twist and price is sitting this far away, we do tend to get a magnetic effect into the cloud, right? So we have the combination of both at the moment. The Tenkin and the Kijun having its massive disequilibrium, as well as price underneath the Kumo with disequilibrium. So at this stage, we can use our Tenkin as our guiding light. The weekly Tenkin will be our guiding light. One of two things is going to happen once we start seeing weekly candles above the Tenkin. Either price will move up to the Kijun, or the Kijun will start coming down towards price. Equilibrium will be established one way or the other. Price will move up to the Kijun to fulfill the C-span trade, or the Kijun will come down to price. Now here's the thing, guys. Even if price doesn't move all the way up to the Kijun and we see the Kijun instead come down to price, we still have the Kumo twist that is out of equilibrium. So we essentially have two equilibrium trades on our hand over here. And let's not ignore the fact that the cloud over here, the red cloud, is getting thicker and thicker and thicker, which, if Bitcoin keeps consolidating, is going to give us our third equilibrium trade, right? We don't have this yet though, so let's not get carried away. But before we go on any further, let's go ahead and look at a couple of examples, right? All right, let's go ahead and look at a couple of examples. We're going to look at the 2018-2019 bear market along with the 2014 bear market, right? You guys can see right over here, massive disequilibrium between the Tenkin and the Kijun, as well as price sitting so far away from the Kijun and so far away from the Kumo twist. What do we end up seeing? We saw a volatile move into the cloud, right? The Kijun and Tenkin also came back into equilibrium. We got a bullish TK cross over here, but the cloud was still red, right? So yes, we got a bull TK cross, but a bull TK cross with a red cloud is a weak bullish TK cross, right? It was only after we got the green cloud, and remember, it is forecasted 30 bars in advance, right? So when exactly did we get the green cross? It would be somewhere around here, right? Around the time Mango was getting extremely bullish. You guys remember how bullish we were in this phase? Why? Because the cloud had finally twisted green, right? We look at the current market, guys. The cloud has only just twisted red. So we have a while to go. A lot of accumulation opportunities for those of you who are looking further down the road. If you guys are thinking multiple years ahead, that's where the big money is made, right? Accumulating now in this phase, but you can do it safely knowing that, hey, As long as the cloud is red, I'm not going to get too excited. And that's going to be my base case, guys. Weekly cloud is red. I am not going to get excited. Not for the big bull run at the very least. I'm still going to get excited for this equilibrium trade, just like we did back here. By the way, this was when Mango was born, guys. All the way back over here. This is when we started doing our first few videos because we noticed the equilibrium. We noticed certain signatures in the monthly. We put all of that together. Remember, it's not just one thing you want to look at. Multiple things, an entire story put together is what gives us those big, strong, confident trades. And we got that big move, right? A nice equilibrium trade, but the cloud was red. So we got the edge to edge after that. Then we got COVID, and then the big run, the bullish TK cross, green cloud, price living in equilibrium with the Tenkin and the Kijun. We got the bull run. Okay, this was 2018, 2019. Okay, very good example. Let's go to the previous cycle now. What do we have? Again, same story. Price was in disequilibrium with the cloud as well as with the Kijun, right? Massive gaps between the two of them. But this time it was a tad bit different, right? We did not see price get sucked immediately into the cloud and the Kijun. Instead, what we got was a consolidation. The cloud thickened. And when we got the move eventually into the Tenkin Kijun, we got the edge-to-edge equilibrium trade. So the equilibrium trade did come, and it came with a bigger magnitude with continuation after that instead of a deeper pullback. And why? Why was that? Well, look at the cloud. The cloud turned green. Before, in the 2017 cycle, we got the disequilibrium trade over here in this phase, right? But the cloud was still red. So when we got the pullback, we got the edge-to-edge trade on the pullback. Here, however, the edge-to-edge trade came with the equilibrium trade, and then the cloud flipped green, right? So when the pullback came, it ended up being support because the trend had flipped green. So the pullback came into trend support, and then we got the big move. Now, some of you guys may be getting confused. I urge you guys to rewatch the video and take notes. I understand that can be overwhelming, and I'm doing my best to give you guys a crash course. Do understand that it took me around 5 hours to explain all of these components to the seedlings in the seed program. So yeah, I'm doing my best, guys. Overall, the story over here is that there's an equilibrium trade coming, but do not get too excited even if it does come unless the cloud flips green. Okay, so there's something else I do want to talk to you guys about, and for that I'm going to go ahead and quickly delete these arrows right over here. I want you guys to notice that how in both market cycles, price shot its head above the cloud and then dipped back into the cloud, right? So over here you guys can see that we shot our head to around the $763 level while the top of the cloud was sitting at around 650, right? So poked our head above and then price dipped back into the cloud. Same story over here in 2019, right? Poke the head above and then dip back into the cloud. Now, what if we do something similar this time around, okay? This is going to be one of the bases for our forecast that we want to talk about very soon, okay? So let's say price does something similar, okay? It closes above the Tenkin and it makes this move all the way up to the top of the cloud, dips its head above, and let's say we use like the top of the cloud over here as well as the Kijun as a kind of zone that price reaches before it dips back into the cloud, okay? So again, we are forecasting a equilibrium trade to the top of the cloud, above the cloud, right? We're looking for Bitcoin to push its head above the cloud, perhaps around the $49,000, $50,000 level, and then having a retrace. We don't know how deep the retrace is going to be. We're going to need more information, right? We're going to need the cloud to develop, etc., etc. But for now, let's assume that price, okay, either now or later makes its way above the top of the cloud. We're looking for a move to around $50,000 approximately. Cool. So let's go ahead and note that down. Okay, 50K, right? And by the way, guys, I'm actually walking you through my thought process when I was going through all of this, right? So we're taking it step by step. And now what we're going to do is we're going to go ahead and zoom out so we can look at both cycles at the same time, okay? So I was looking at this entire picture and I was saying to myself, you know what? Bitcoin rallied this time in this cycle from around 4,000 to 60,000, which is a pretty good move, but it's nowhere near as massive as the move we had in the previous cycle, which was from $200 all the way to 20,000, right? This was way more volatile, and that does make sense because as markets mature, markets are not going to be as we're not going to have as much of an upside potential each cycle, right? It does make sense. So I said, okay, you know, if in the previous market we had a bounce of around let's say 350%, what if this time we get half as much of a bounce? Remember, the current bull market, the most recent bull market, was not as aggressive as the previous bull market. So it's safe to make an assumption that the current bounce, if we do get a bounce, will not be as aggressive as the previous bounce, right? So we're going to say that, hey, let's go ahead and take half the percent of 350 over here. That would be around 175%, right? So we're going to go ahead and take a quick rough measurement from our current price, and we're going to say we're looking for around 175% move from here, and that's going to take us to, well, what do you know? Very close to our equilibrium trade, right? It's going to take us somewhere close to the Kijun at around $47,000. Very interesting. And at this point, I said to myself, if I am doing a bounce relative to how volatile my market cycle was, that's as good as doing a Fibonacci retracement based on the market cycle lows and highs, right? So we're going to go ahead and take our retracement tool, our Fibonacci, from the current market's high of around $69,000. And we're going to make an assumption that the market retraces from somewhere around these levels, right? So we're making an assumption over here, guys, that our low is at the current market low, okay, which is around 15,200. We don't need to get too exact with this. And what do you know? We are seeing that the $50,000 level is lining up with the 0.786 retracement level. So let's go ahead and note that down as well. We're going to write that down right over here, 0.786 retracement level, okay? And remember, the 0.786 level is also at the top of the red cloud. So this would line up with our thesis that we rally to the cloud, right? Poke ahead above the cloud, okay, and then dip back down. So our 0.786 level is lining up with both the top of the cloud thesis as well as the fact that we rally only half as much as the last cycle, which is around 175%. But let's see how well this lines up or sits with the previous market retracements, okay? Again, we're going to do the same thing that we did for this current cycle where we went from high to low, right? We're going to go from 20,000 to 3,000. What do you know? We rallied to the 0.786 level perfectly last time as well. Okay, let's go back to the previous cycle, the one before this one, okay? We're talking about the 2014 rally. We're going to go ahead and do the same thing, okay? We're going to go from high, we're going to go from high to low, and what do we get? Perfect. 0.786. So now we are beginning to see massive confluence. Let's go ahead and zoom out. We are seeing a retracement along with an equilibrium trade on the 0.786 level in the 2015 bear market. We are seeing a retracement along with the equilibrium trade at the 0.786 level in the 2019 bear market. And this time around, we are seeing a potential lining up of factors. If we put all our videos together too from the most recent weeks, guys, another potential move to 0.786 with our equilibrium trade at the key $50,000 level, which is going to be a psychological level, right? So at that point, guys, do we break past to high numbers or do we see resistance? Well, the cloud is still red, right? So until the cloud is red, we have to be cautious as a community, right? You guys might be asking at this point, what about the previous markets? Well, I've actually done retracement analysis of the prior two cycles as well, and I've put together a more complicated, albeit comprehensive analysis with future targets, okay, cycle targets that we just do not have the time to discuss in this video. In fact, it's going to be a more complicated video, so you guys got to let me know in the comments down below. Do you guys want me to cover another video similar to this? It's going to be a lot of effort, but I'll be happy to do it if I get enough of you guys wanting a video like that. So yeah, long story short, guys, we are seeing a lot of things come together now, and I'll be adding more to the story that we've been developing over the past few weeks. But remember, things are not binary. If you guys are looking for the big wins in this market, it's not going to come from just one video. We're going to have to put together a story, a thesis over multiple videos, and then trade with that plan in mind. So that's what we're going to be doing, guys, and hope you guys follow me on this journey for this market, because it's going to be a very exciting one. If you guys enjoy this video, do hit the like button. If you guys are new here, subscribe to the Mango family. I'll see you guys in the next one, and let me know if you guys enjoyed this video. Your comments, by the way, have been so freaking motivating. Thank you, all of you. I will see you guys in the next one.